We see a lot of people talking about a possible recession, a lot of forecasts for recessions, Nancy. Are you rotating into tech or are you fading tech right now?
Well, Frank, thanks so much for having me. We were adding to technology all throughout the fourth quarter, and we've actually been trimming back as recently as the morning of the Fed's presser. I think you still can make money in tech from here for sure. These companies turned in really solid earnings growth last year and still were sold off. So you think of a company like ServiceNow that actually turned in almost 30% earnings growth last year. Palo Alto Networks, almost 40% on a trailing calendar year basis. And so you have to pick your spots. But our investing theme has been old economy companies that embrace technology or embracing the digital revolution, and then the providers of those underlying tools, the digital tools to really make companies more productive. And I think we're in early innings. So I think you wait for volatility and then you continue to add to some of these names.
All right, so you're looking for opportunities in tech, continue to look. What are some of the companies that you are eyeing, and what are the qualities that they have that you're looking for in what's certainly an uncertain environment?
Yeah, well, is that not the truth? This has been the single most complex investing environment in my career. We're looking for a couple of things. First of all, we want reliable growers. We want companies that can grow their business in all economic situations. And so, obviously, if you're in a recession, they're going to grow less quickly than they do in an economic expansion. But we want sort of the essential technology companies. And we also are looking very closely at management. And that's it's a qualitative factor. It's hard to assess, but we want strong management teams. So Bill McDermott in ServiceNow is a great CEO. Satya Nadella certainly is a great and wily CEO. So we own Microsoft. We're looking for companies that are in the sweet spot of cloud growth, or the chip makers like Broadcom that are suppliers to enterprise cloud and AI. And then Palo Alto Networks is a cybersecurity company, obviously, and that's a space that CIOs have declared is the last place they will cut in their budgets. So if you look at the numbers, Microsoft, if you look at the surveys, gets the most CIO spend, and we know that from the IDC surveys that software as a service is expected to grow 15% next year. So those are the names that we want to be looking at and adding to on weakness.
So you're saying you're adding on weakness, but you're also trimming some of your positions in some of the big winners for this year. For example, Salesforce up 48% this year. Why did you decide to trim now? They've kind of avoided a proxy fight. It seems like Mark Benioff has calmed down all the dissension.
Well, we'll see. I mean, I think there's definitely a succession issue at that company. They've had significant turnover in management, and that's always a red flag for us. But if you look at the underlying business, of course, that's why we still hold it. I mean, it's a large holding in our portfolio, but we don't want the market to make our weighting decisions for us. And so when it appreciated some 40%, we trimmed it back to what our target was. And